Okay, but I don't see anything. कहाँ पे आएंगे? तो आएगा ना यहाँ पे? No, it has to show here. Otherwise, how will they see? How will? But what about the odd panel? Panel go. You have to show them. Show the panel there. What do you want? No, no. Don't use this. I need this. Start there. I want to see it there. It should come there. Excuse me. They should come up here. Yeah. But I need to see them. Okay. No, I'm okay. I'm okay. Look, do me a favor. Can you see if my name board is there so you can bring that out from the back? Is it off now? Is it off now? One second. Shankar, can you speak? We want to make sure that we can hear you. We can't see you though. Zoom video. Kyle, can you, can't see you. Kyle, can you say something? Shankar, can you say something?
Can you hear me? Ram, can you hear me?
Vaibhav, can you turn on your video? We can't see you. Shankar, we can't see you either.
Can we request Mr. Shankar to turn on their camera? Sir, are you able to hear me? Mr. Kyle, are you able to hear us?
Yes, I can hear you.
All right, thank you. Yeah.
Check charts, check charts. What is sending? Oh, then that's there.
Mr. Shankar, are you able to hear us now?
I can hear you now. Can you hear me?
Yeah, we can hear you.
Okay, so when I try to switch on the video, it says the host has to turn it on. So sounds like some button is depressed at your end. But it's good you can hear me now. That was a challenge earlier, so we're making progress, so good.
Sure, that's all right. Professor Vaibhav, can we request you to turn on your camera, please?
I want to try, but
Let's get started.
All right. Ladies and gentlemen, distinguished guests and esteemed colleagues, I, Harpreet,
And I, Divyam.
welcome you all to this panel discussion on central bank digital currencies at Global Finance Conclave at the Jindal School of Banking and Finance. The rise of cryptocurrencies and blockchain technology has brought digital currencies to the forefront of financial landscape. And central banks are now exploring the possibility of issuing digital versions of their own currencies. You must be wondering that what exactly is CBDC? Central bank digital currencies are a form of digital currency that is issued by a country's central bank. They're similar to cryptocurrencies, except their value is fixed by the central bank and equivalent to country's fiat currency. CBDCs have the potential to transform the way we make payments, manage our money, and even the way we interact with financial institutions. They offer the promise of increased efficiency, security, and financial inclusion.
However, the adoption of CBDCs is not without challenges and risks. There are important questions that need to be answered about their impact on monetary policy, financial stability, privacy, and security. In this panel discussion, we have brought together experts from academia, industry, and government to share their insights and perspectives on the potential of CBDCs, their risks, and their future. We will delve into the technical, economic, and policy issues surrounding CBDCs, and we will explore the opportunities and challenges they present for different stakeholders. But before that, I'll ask Harpreet to introduce our panelists.
So first up we have Mr. Vaibhav Agarwal. Dr. Vaibhav Agarwal is an assistant professor in accounting and finance at Jindal Global Business School with over 14 years of experience in academia and industry. His research focuses on financial markets, and he has published his research in various prestigious journals. Dr. Agarwal's teaching interests include equity valuation, financial modeling, corporate finance, and financial derivatives. He has a PhD from Indian Institute of Management, Lucknow, and he also holds a CFA charter. We're extremely grateful to host you, sir.
Now coming to our second panelist, Mr. Sankar Krishnan. Mr. Sankar Krishnan has over 15 years of experience in banking and financial services across North America, London, Africa, Middle East, and South Asia, leading global initiatives in banking and financial services in fintech. He has a successful career with Citigroup, Standard Chartered, and Pricewaterhouse, etc. His experience includes deep domain knowledge of corporate banking, transaction services, prepaid cards, and mobile wallets. He is also an advisory board member at fintech, retail and health, and wellness companies. We are privileged to host you, sir.
Next in line, we have Mr. Kyle Schneps. Mr. Kyle Schneps is the Director of Public Policy at Foundry, a digital currency group company. He's a former US intelligence officer and a diplomat, serving most recently as a special advisor for pandemic response in the New York State Executive Chamber. Mr. Kyle is a former White House fellow and a graduate of Columbia University. We look forward to having an engaging discussion with you, sir.
Now we would like to introduce our session chair, Mr. Ram B. Ramachandran. He's a professor and vice dean at the Jindal School of Banking and Finance. Professor Ram has over 35 years of experience in building and leading high-growth businesses and high-performing teams. He teaches management, leadership, entrepreneurship, and emerging technologies, and is currently researching the impact of EdTech in educational pedagogy and the transformative nature of AI and fintech across industries. He holds an MBA from New York University and is pursuing a PhD in the intersection of technology, entrepreneurship, and education. We are extremely grateful for his contributions to Jindal School of Banking and Finance and JGU. We are privileged to have him as a session chair for today's panel discussion.
Now we'd like to hand over the stage to Professor Ram B. Ramachandran for further proceedings.
Thank you, Harpreet and Divyam. I don't know whether you guys can hear me or not, and hopefully there should be no echo from here on. Kyle, can you hear me? Shankar, can you hear me? Vaibhav, can you hear me? Any of you? Shankar, can you hear me? No, I can't hear. We can't hear Shankar at all. Vaibhav, can you hear? Can you say something? Looks like Kyle, it's just you and me for now. No, I can't. We can't hear you. There's some problem. We can't hear you at all. No, Kyle. Vaibhav, can you hear? Can you say something? Yeah, we can't hear them at all. Shankar, can you hear us?
I can hear you now. Can you hear me?
Yeah, absolutely. Clear. Can't see you though.
Me now? Yeah, that's okay. No worries.
Am I
We
audible,
got
Professor Ram?
right, so we are good.
Vaibhav,
Yes, Professor Ram, am I audible?
you are barely audible.
Okay.
How about you, Kyle? Can you say something?
Yes, are you able to hear me?
There is a lag
They're
there.
increasing over volume.
Okay.
It says the host has stopped the video, so I don't know if there's a button that Keshav can release to get us on video. I don't know. But you can hear me okay, right?
I think so, yes. Yeah.
Okay, good.
But let's start the discussion and see how that pans out. If it doesn't, then we probably have to abandon it, unfortunately. Technical difficulties, obviously. So, first of all, I want to welcome all three of you. I know that Kyle and Shankar, you guys are in very early in the morning at around 6 o'clock in New York. And Vaibhav, I don't know where you are, which part of the country you are in, which hills station you are in Himachal Pradesh. But welcome to all three of you. So I just wanted to, first of all, thank Harpreet and again Divyam so far for doing the introductions. They have set the stage for us to talk about some interesting themes around central bank digital currency and cryptocurrencies and what impact they're going to have in both developing and developed countries as well. Right? So let me start with some facts. In 2022, the Reserve Bank of India, which is the central bank in India, equivalent of the Federal Reserve in the US, they proposed a three-step approach to implementing central bank digital currency. And they said this will be with little or no disruption to the traditional finance system. RBI launched what is the wholesale CBDC on November 1st, primarily for doing interbank transactions and security settlements, etc. And they had assigned like 4 or 5 banks to go through the sandbox testing process. Then RBI started doing the retail CBDCs testing on December 1st. And they issued this e-rupee, which is the digital rupee. And they let the retail sector start enjoying the digital currency platform. Again, they started with about 4 banks in 5 cities or something, and then since December 1, they have actually expanded that to an additional 4 banks and an additional about 9 cities or so. And so far, they have about, I think, close to 750,000 people who are actually using the e-rupee, digital rupee platform. And there are also about 50,000 merchants that have signed up to this. Okay? So that's kind of the background in terms of what has happened. The other key fact around central bank digital currencies is that there are over 100 countries, maybe 110 or 120 countries, which are in various stages of experimenting, planning, testing, designing, in different stages of implementation of central bank digital currency. So the question is then, while CBDC is taking roots, at least in the thought process at this point in time, the other fact is around cryptocurrencies, right? Cryptocurrencies saw a huge gain over the 2019, 2020, 2021 time period, and then it got its jolt in 2022, and it just dropped steeply in last year. Okay, and there have been some very dramatic drops. So Bitcoin dropped, one of the cryptocurrencies, it dropped about 65% in 2022. And then there were some very spectacular bankruptcies and spectacular companies that went out of business. Whether it is the Singapore-based 3AC, which lost about $10 billion, or the more famous FTX, which started with $32 billion at the beginning of 2022, and it went bankrupt by the end of the year, right? So given the fact that there have been such a spectacular up and down of cryptocurrencies, such a volatility, there are still about 20,000 cryptocurrencies in the world. So that means there must be some demand for it, right? So what I want to explore, at least in the next 45 minutes or so, is to understand from an industry perspective, from a business, political, and an economic perspective, and obviously we'll touch on the technology as well, how these CBDCs are actually connected with cryptocurrencies to some extent, but also in terms of how that's going to shape the future of the developing nations as well as developed nations, right? So with that as a backdrop, I want to start with some very fundamental question, right? And especially this room is full of students here and some faculty members as well. So for the panelists who are not here with me, just know that there are students of commerce, business, people who are learning technology, some law students as well. So there is a mix of students here and some faculty members as well. Okay? So I want to start with some very basic question as it relates to CBDC, or the central bank digital currency, and cryptocurrency. So Shankar, I would like to start with you in terms of what do you think are the similarities and differences between these two constructs? And then we can pick it up from there. And probably Weber can chime in as well.
Sure, you can hear me okay, Ram, right?
Yeah.
Okay. So basically, you're right that, so first off, I mean, congratulations to all of you at the university. I went into the portal and saw the mix of courses that students can choose. Very impressive. You get a lot more practical way in which you can mix and match compared to when I went to school. So congratulations on that. So I think coming out of this crypto winter and fall, Professor Ram, is the fact that we all need regulation. So I think we cannot fault the, bad businesses always fail. And a lot of what you see is bad businesses failing rather than the technology or the concept failing. So I would like to think that cryptocurrencies and CBDCs have some things in common, but they are vastly different because one is issued by someone that is a regulator of sorts, and one is issued by someone that gives you a credit backstop. So someone, just like we look at a US dollar or a rupee and it says that the central bank in any of the country is responsible and guarantees the issue. That comfort is not there in crypto. Obviously, the other people would say that, look, inflation and other things are actually eroding the fiat and so on and so forth. But I think after the crypto winter, what we are seeing is the rise of a new type of crypto that is more regulated than what it was anticipated. So if you look at Bitcoin, I would like to say that Bitcoin is the only example of a fully decentralized crypto that is working well. And, yes, more people like Warren Buffett and Charlie Munger and others have questioned the investment and transaction capabilities of these, but it is still a currency that exists, has withstood a lot of trials and tribulation, and it's here to stay. So I think we could make a distinction between Bitcoin and every other thing. I know Ethereum gets put in the same bucket, but Ethereum has 5 or 6 people that control the code, and Bitcoin is more decentralized. Therefore, I would say that the rise of the CBDC is a function, and the growth of the CBDC is very important. I would not say that CBDCs is going to solve financial inclusion and so on. I think it will help it in some extent, but there are reasons why people are unbanked and underbanked. I mean, obviously there are credit issues. You have the ability to pay, the willingness to pay, and all of that problems don't go away just because we go into CBDC. But I think the fact that a regulated body or the government is issuing an opportunity for its citizens to partake in the digital economy without fear of risk is a good thing. So when the citizens, you mentioned 2,000 cryptocurrencies are there and growing, without a lot of knowledge, transparency on any of those currencies, without a lot of knowledge and transparency on who's behind them and what are the rules by which it has governed, citizens from around the world are going and investing in these currencies and have lost their shirt in some cases. And therefore, the launch of the CBDC is an opportunity for citizens to participate in digital currencies without the risk of cryptos. So in those senses, they are different. I think what is also different is that you don't need CBDCs to be mined. You don't need CBDCs to kind of be managed by various groups of people. I think it is a network that is already there because the banks that represent both the wholesale component and the retail component will be involved in some shape or form. With that, I want to pass to Kyle to give him an opportunity to respond, and to Professor Vaibhav, and I'll come back on the other side. Just wanted to introduce it that way.
Sure. So before Kyle, you respond, I want to add an element of an element as well, right, to what Shankar just mentioned. So in some sense, the way I had set up the stage was almost like, are these Bitcoins and cryptocurrencies the villain in the story, right? In some sense. So, and while
they are not the villain. They are like most types of inventions that happen first. I'm sure a few people lost their lives when electricity first happened and they touched it without proper equipment. So I think we have to realize that these are all new ways of doing business, atomic settlements. I think this has given rise to a new way of engineering what money can be and the future of money. So I don't think they are villains. I think they have introduced a path for us to improve on. I think sadly the cryptocurrency failures have been a result of corporate greed for the most part, and not a failure of engineering or technology for the most part. and although there are questions on how many people actually control the code and is it fully decentralized. So I don't think we should look at them as villains. I don't think we should look at them as heroes. I think we should look at them as someone in between. And Bitcoin, I think we can't blame it. It is still here. It is having a market. There's a lot of liquidity in it. Value is obviously a function of
public policy director in one of the largest Bitcoin mining world, if you will, plus all your other background and portfolio. If you can just elaborate on this in terms of where do you see the differences from a cryptocurrency as of today, not in terms of what happened in 2008 and the innovation that happened because of Bitcoin, but as it exists today. How do these cryptocurrencies in general and also specifically Bitcoin, how do you think they are, either adding to the community of wealth creation, as well as in terms of what it is doing to the environment? There was a reference to the fact that you don't have to mine. So that means there is an environmental impact that is kind of being talked about. So if you can kind of allude to some of a couple of factors around the cryptocurrency world, and then we can get back into CBDC, and then we can bring Professor Vaibhav as well.
Yeah, thanks for having me. Can you hear me okay?
Yeah.
Great. Yeah, happy to be here and address some of your questions. I'll touch on a few things that have been talked about. Firstly, most folks in the industry, in terms of Bitcoin and cryptocurrencies, very much recognize that there are cycles, and the longer you've been in this, the more you know that it kind of runs in 4-year cycles, and so you go through this bull and bear market or boom and bust period, and it's expected, and the best companies prepare for the crypto winter, as it's called, during that bull market, and are prepared. Some of the spectacular crashes that you mentioned, I agree with Sankar. These are, the FTX situation is a fraud. It doesn't matter what industry they were working in, they would have been fraudulent. And I think that something like Bitcoin differs from CBDCs fundamentally. The purpose of Bitcoin is to have a decentralized exchange of value, something that is not controlled by any one actor and does not have a single point of failure, that cannot be inflated away, that cannot be debased by a government, that cannot be corrupted. Is there audio problems?
No, that's good.
Okay. That cannot be corrupted, that cannot be confiscated. These are really important things. And we see this more and more globally, especially in areas where people need to take their wealth with them when they are perhaps fleeing an authoritarian leader, or leaving a country because they are in fear for their safety and their ability to build wealth. And they're able to take their wealth with them without dragging gold bars. They can put it on a small little USB wallet and bring that with them. So there's a lot of incredible use cases for this technology. Next, I'll say, in terms of the energy uses and environmental impact that you bring up, certainly proof of work mining, which Bitcoin focuses on, which are basically data centers, like any data center, uses electricity in order to generate new Bitcoins to verify transactions. But more importantly, most of the energy used for Bitcoin is to secure the network. Just like any any government agency, any university, any company uses a firewall, so does the Bitcoin network. And that firewall is created by miners that use electricity to protect people's investments. And with nearly 150 to 200 million people across the world who invest in the technology, they're entitled to security for their wealth. And so that is important to bring out. Not only there's lots of ingenuity in terms of how energy is used and a lot of incredible breakthroughs for grid balancing and incentivizing renewable energy production that Bitcoin brings that we can talk about as well. But I think in terms of CBDCs, it's really important to remember that Bitcoin and a CBDC are fundamentally, I don't want to say opposed, but I should say different. Maybe opposed is the right word. A CBDC gives more control to a centralized government, and a Bitcoin is decentralizing the state's monopoly on finance and economics and money and value. So that's the fundamental difference between the two. And there's a lot of national security implications for that.
Thanks, Kyle. So one of the things that I was, what you just said triggered my thought process was that while, cryptocurrencies, when it started in 2008 from Bitcoin and beyond, in some, subconscious level, the governments are also feeling the heat. One, obviously, to protect its citizenry from these high-risk assets. But also, there may be a little heat being felt by central government, banks in terms of private currencies taking over. And so, I don't know whether that is true or not, but that could be a motivation for the Reserve Bank of India or Bank of England or the Federal Reserve to start thinking about digital currencies. So my question to Vaibhav is this, right? What do you think are the motivations as it relates to the central digital currencies from a Reserve Bank of India perspective? What do you think were they thinking about when they said, let's start designing and testing these digital currencies? And then we can go around and also understand from the US perspective, because they seem to be a little slow in terms of thinking about and testing and piloting the digital currencies in the US. But let me first start with India and ask Vaibhav in terms of what are the motivations for CBDCs in India.
Whether I'm audible?
Probably just go back a little bit from the microphone, maybe it will ease.
Okay. Am I audible now?
Not particularly, it's not very clear. Say something.
Hi.
Mike? Oh, your Vaibhav, I think your mic.
Echo?
Go away from the mic. Go away from the mic.
Okay. Am I audible now?
Slightly better, yes.
Okay, great. So thanks for inviting me. So so basically CBDC as a technology is basically an opportunity by the regulator. I mean, they are trying to learn from cryptocurrency technology. So they are now basically using that technology and that idea to basically wrest control back from anonymity. So basically crypto was designed in a manner that people can make anonymous transactions, and regulators and politicians and government do not like anonymity. So through central bank digital currency.
Hey, Vaibhav, are you still there?
Yes, sir.
Okay, can you move closer? We can't hear you very well though.
Okay. Am I audible now?
Not really. But please go ahead.
Okay. So basically, the idea from any central bank or RBI from CBDC is to basically try and get back the control. So basically, what they're trying to do is they're trying to make transactions which are traceable, They are trying to make people move away from the banknotes. So basically, they want people not to use banknotes. They want the transactions to be recorded, and that has multiple benefits for the government. I mean, for the regulator also. First of all, when the transactions are non-anonymous, I mean, they can track it. That basically means that that will get recorded in the economy, and then the taxes will flow. If people make cash transactions, you can't really generate tax from that income. But if slowly and steadily people move towards the digital currency, then it will help them. And secondly, why CBDC? When banks already have a digital system, we can park our money in the banking system. Why do we need CBDC? See, what happens is there are many customers who do not trust banks. Many banks have minimum balances. So maybe a person in a village in Haryana does not trust HDFC Bank. So for those people who do not trust the banking system and they are afraid of the low minimum charges, any other debit card, credit card, these people can also be brought into the system. So these people will not be hesitant. So this is a new 5, 7%, 10%, or 15% of the population which will never get into the banking system can get into the digital system. So this is one more benefit of the CBDC. So these are a few, I think, reasons because of which CBDC has been proposed. I don't really think that it will fly from a retail perspective. Initially, I think the banking regulators, RBI, will mostly start the volume game in the wholesale CBDC because they don't have the bandwidth to deal with so many retail investors, right? So many retail population. So they will, I think, move towards wholesale CBDC first. But yes, I mean, it has both pros and cons. Maybe we can discuss it later on.
Okay, so you mentioned a few points. I just wanted to go back to what Shankar mentioned, that Shankar, you mentioned that you don't believe that CBDC is really going to promote financial inclusion, if I heard you right. And while Vaibhav was talking about probably getting to the last mile, the 5%, 10% of the people who have not ever gone to the banks. So,
Yeah.
Can you elaborate on your reasons why you
Sure.
think that it's not going to impact from a financial inclusion perspective?
Yeah, no, I was just saying that, I mean, the 5% unbanked and underbanked are in that situation for certain reasons, right? I mean, so if you look at why banks have not gone and embraced them, obviously banks are in the business of taking risk, and obviously maybe they feel that the risk on these unbanked populations, because of their lack of the ability to pay, willingness to pay, or because they are not yet in the market for AML, KYC, and so on. I mean, regulators want banks to do certain things in a certain way, and banks may feel that they are not able to do those certain things in a certain way. However, if the government wants to uplift these people, there are other ways to do it as well. So, for example, the priority sector lending in India is a good example of how it works. You can, yeah, I mean, anyone can come together and say, here are these 2 million people that are unbanked and underbanked, or whatever the number is, and we can create a different way in which we can even do a better job than the CBDC. So I don't think the role of the CBDC, yes, there are some aspects of financial inclusion, but I agree with Professor Vaibhav. We don't want to reinvent the wheel. Banks in the US, as you know, I mean, have had many hundred years of history where they have details of KYC, AML, and a lot of these things that work well. And in fact, the US banking system and the Indian banking system is much stronger today than any time before and around the world because of regulation after the financial crisis and so on. So I don't think the retail CBDC, in terms of let the billions of people around the world go and open up an account with the central banks, make any sense, because as it is, we are all coming out of COVID, have a million things to do. Central banks and the governments have many things to do, from flipping their country, pushing trade, and so on. I don't think this is something you want to encourage. But that said, if there is a way in which they can use the retail banks as the distribution arm, and they are able to accomplish the twin objectives of financial inclusion and having a digital currency, that makes sense. My point is, it raises a lot of challenges as well. First and foremost is credit creation. All these retail banks that Professor Vaibhav mentioned and others all around the world are responsible for credit creation and have the multiplier effect. Now, let us say you open an account directly with the central bank, and let us say you take, I'm just taking a $500 as an average deposit, just for example. Let's say the $500 now moves from the retail bank to the central bank. How is that retail bank going to enable the credit creation and help small and medium businesses and so on? And there are a lot of issues in the design of this. Is it going to be interest bearing? Is it going to be non-interest bearing? Do retail banks get a credit for this when they do it and so on? So I guess the answer is it depends on the country. My view is that, I mean, the US has not done anything because a lot of it is already digital and there are other priority issues right now, although lab experiments continue. But depending on the country, if you're China, your objective is different. If you're the UAE or Saudi, your objective is different. And some of the smaller countries, it's maybe easier working with the retail banks to accomplish this. But I think for the central bank to say all its citizens should open the account with the central bank for financial inclusion doesn't make any sense, because there is always going to be an aspect of losses, if any, are going to be borne by whom. And if the answer is let us give good money away, then there are other ways we can go and solve this particular problem. But then there is also this new concept of offline CBDC that is actually doing a better job of financial inclusion. And we can, I can go on, but I'm very conscious. I don't want to get into what Kyle wants to say and you and Vaibhav want to say, but happy to chime in on the other side.
So Shankar mentioned about the credit creation process and how the question of the design of CBDC comes into play. So I'll pick up on that point. And Kyle, given your background and experience, how do you think introduction of a CBDC is generally going to impact the monetary or the fiscal policy within a country, and also in terms of from an international perspective, how is that going to impact anything around the trade policies, if at all, right? Especially the way Shankar mentioned about China, and then they have probably at least 5 years or 3 to 5 years ahead of any other country as it relates to the introduction of CBDC. So does it mean that there is going to be the destabilization of US dollars, the benchmark currency across the globe? And how does that impact the trade policies across nations? So I know I'm packing a lot of questions into that, but one point triggered a whole bunch of other things. So please go ahead.
Sure. What I'll say to that is that I think certainly I think there are two major intentions of having a digital yuan in China. The first is what you were saying, which is to compete with the US dollar as the world's reserve currency. Secondly, and I would say just as important, the digital yuan, one of the main intentions is to sort of be the crowning achievement or the completion of China's ubiquitous technical surveillance programs. This is something that allows a CBDC, a digital currency, allows a centralized state like China to monitor the financial interactions of its citizens, to even turn off the ability to spend money if you don't adhere to the state's prescriptions. And so this is something that we have to be aware of in every country, is that a digital currency with perhaps a benevolent leadership can at best only just maybe exacerbate the current problems that central banks have been causing. But I think that at worst, in the hands of a government that is bent on more restrictive policies for its citizens, it can be used as something that tries to control and surveil the citizens of that state. And so I think it's really important from a privacy perspective in democracies to take into account that there's a lot of existential threats that CBDCs present to the very fabrics of our democracy. And I'll add to that in terms of Bitcoin, like we were talking about decentralization, and we have to remember that the very foundation of democracy is a decentralization of power, right? It's taking it from a monarch and distributing, hopefully, in a functional system of checks and balances, and ultimately with the people of that state. And so I think it's very healthy to have a decentralization in our to match what happens in our political systems in places that have embraced democracies, whether it's a congressional or parliamentary system. These two things go hand in hand, and so I think maybe part of the slowness on the part of the U.S. is that there is something built into democracies where people are a little bit hesitant. To hand over their privacy and that decentralization. And I just want to touch on the financial inclusion aspect. I believe, and I think a lot of folks in the industry believe, that cryptocurrencies, or especially fully decentralized ones like Bitcoin, offer the ability for people who have long felt, let's say, restricted by the current financial system, let's say Wall Street. They don't feel that they have insider connections. They've long been victims. These are usually communities of color in the United States. They've long been the victims of predatory loan practices, all sorts of things. They have gravitated toward cryptocurrencies. And so when you look at Pew polls and University of Chicago surveys, Plaid surveys, these are all independent surveys that are done. They're showing that Black and brown Americans are investing in cryptocurrencies in a double-digit percentage increase over white populations. It's the only asset class where Black and brown Americans are investing in it more than the majority white population in the United States. And so we need to acknowledge that this is not some technology for crypto bros who have an insight, or this is a technology for people who want access. And that's what they're claiming. They feel that they do not have access to the traditional financial system because of, like Sankar said, 100, 200 years of disenfranchisement. And now they're gravitating to something new that they feel that they can participate in. And that's, I think, what financial inclusion is really all about.
Vaibhav, I think you covered a lot of ground, and some of them were very interesting in terms of the demographic of who is using cryptocurrencies or moving towards that. I think that's something that we should study further as well, because definitely in India, anecdotally, I can say that probably it is the age group that is more drifting towards cryptocurrency than people who are in the in the rural areas or in other regions, but more the age is where the demarcation happens, at least in India.
It's definitely generational.
Yeah, the generational understanding and the ability to take risks is a lot more at that level. So Vaibhav, I wanted to get your thoughts as well in terms of how does it how does the CBDC will fit into the Indian context from a fiscal policy or a monetary policy perspective? What are your thoughts on that?
I mean, the impact on monetary and fiscal policy will be, depends on how the RBI places CBDC. From my understanding, the CBDC in India will be non-interest bearing. So initially, there was a fear that if CBDC was interest bearing, then that will be a direct competition to banking system. The deposits will be reduced, and that will further reduce lending and the profitability of banks. But from what the RBI guidelines and the circular is saying, that it will not be an interest bearing. So that problem goes out of the window. But I think what is eventually going to happen is something like this. I mean, there was a time when private sector banks started. So they used to place their insurance people in the public sector banks offices. And slowly the business from public sector shifted to the private sector banks like HDFC, ICICI, and also. Now what is happening is RBI is using the banks. I mean, they are doing partnership with the banks to create a wallet and buy the digital rupee. So you need a bank account to buy that digital rupee. So eventually what will happen is that slowly and steadily the pickup of CBDC will happen over the next 5-10 years. That will reduce the clientele of banks eventually. And it will be in two ways. I mean, not just the deposits. If people don't go to the banks will not be able to sell them any other products like insurance or loans or credit cards. So that is something nobody is talking about. Once the customer does not go to the bank, it goes to the central bank. All the profitability from not on from fees-based income goes away. So many banks, like I am doing a study on financial inclusion on farmers in Haryana. So when they sold their land, how did they invest their money? So many farmers told me that when they approach a private bank or a bank, instead of opening an FD, they start pushing ULIPs or insurance and other mutual funds. So that big clientele, which is a major profit chunk, can go away. So it's a very risky proposition. From the central bank point of view, I really don't think they are much concerned about the economy, to be very honest. This central bank system is eventually about control. They want control over people's transactions. They don't want anonymity, and they just want to wrest control even from the bank. So right now they can order a bank to freeze an account. For example, they want to freeze an account because of income tax issues and also they have to go to the bank. Now they have lost patience for that also. I think they just want direct control. So that is slowly and steadily they will do it. They will give it by freebies, incentives, saying things like security and all, but eventually the whole end game is control. So there will be some benefits from the GDP angle. For example, there are some costs. 1% of the GDP goes into payment settlements. So that thing will get reduced, but from a customer perspective, your privacy will definitely go away. And if you see the case of Nigeria, we remember in 2016 demonetization happened, and in Nigeria recently the central bank forced people to convert the physical currency into digital currency. So if you want welfare of the people, now you will not force things. This is not really about welfare. It's just a talk of welfare of people. It is more about control by hook or by crook.
Okay, I think both Weber and Kyle, both of you touched on the aspect of privacy. So I'm just going to jump into a little bit of the technical angle of it. And when we look at the RBI's or the Reserve Bank of India's policy statement on central bank digital currency and the technical principle behind what they want to do, they're basically the intended objectives are around strong cybersecurity, technical stability and resilience, and sound technical governance. That's what they're saying as their objectives. Nowhere they were talking about privacy as a thrust, if you will, right, or maintain privacy as a thrust. So with that as a background and the fact that both of you had touched on privacy, so my question to Shankar would be, if you were to implement CBDC, what do you think should be the key design considerations that any country should think about when they want to establish CBDC? What do you think should be the key considerations from a design perspective?
There are many, and again, as I said, it depends on the economy and so on. But in general, here is the following. First and foremost is, what do you want the CBDC to do? Obviously, CBDC would end up competing from everything from Bitcoin to cash to fiat and other things. So what is your intent and what do you want the CBDC to do? Based on that, you have to understand what is the level of digital penetration in each of the countries and what is the use, right? For example, from a monetary policy perspective, obviously it brings in a lot of challenges because managing monetary policy just with fiat is tough enough. Now we are adding another component to it, and how will both of them coexist and what will be the rules, right? From a fiscal policy perspective, I think it may work well because if you look at all those money that governments have distributed to various people and a lot of wastage around that, and imagine we had a wallet and obviously it will be a CBDC credit to each of those wallets, then it is arguable that each of them can be managed a lot better with a lot less wastage. The other thing is to give citizens the right to choose, right? So, yeah, okay, CBDC, but I as a citizen need to choose. Do I want to use CBDC as a payment? Do I want to use crypto as a payment, fiat as a payment? And a lot of it is also a function of how I am set up from a balance sheet perspective. So let us say I walk into a store and then I want to pay with CBDC. So the hardware in the stores need to be configured to process all of them, CBDC, fiat, crypto, and so on. So it needs a lot of work at a merchant level, right? And then comes this financial inclusion thing and having a view as to how offline CBDC or some other would work. That is the other design criteria. And how do we then distribute this mechanism to all the banks? Because we are not trying to get rid of them. We are trying to lift them up as well, make it more efficient. So those are my top 5 priorities in design.
Kyle, you want to add anything to that?
No, I think in terms of a design, for sure, he touched on a lot of the important aspects of it. And we do have to acknowledge that, countries around the world are moving towards CBDCs. However you feel about them, they will reduce friction to a certain extent. But you're still having the same old economic or financial or political problems that existed before. And I want to point out that most people who are in the Bitcoin communities or industry or investors don't view it. There are some people who do, but don't view it as something they want to go and buy a cup of coffee with, right? This is for the building of generational wealth, for actually having a digital value, a digital property that cannot be confiscated or corrupted by any government or any individual, that is secure and something that you can actually have. So I just wanted to point that out. There's not many people who think that Bitcoin is going to replace, the dollar or something like that in any sort of near or medium term. But it is important, I think, to have a way of storing value over time that cannot be manipulated by a central bank or retail banks as well.
Yeah, I agree with what Kyle is saying. And one thing to add is, look at what the ECB is doing, right? And it gets even more tough. So, for example, the ECB does not permit citizens to have more than one CBDC up to a tune of 3,000 euro. And that is because if you kind of raise limits significantly, it will kind of create a lot of issues from banks to CBDC and otherwise. But I think Kyle makes a good point. I think, how can Bitcoin be the alternate? We need an alternate to fiat. I think people need an alternate to fiat. And Bitcoin has taken steps to get there. And how do we kind of ensure there is an alternative to fiat for those they want to leave a legacy behind for future generations? And, I think that's what Bitcoin is. So I think it has a very unique role. And I know there are a lot of people saying, there is a lot of people that don't want it to succeed too. Let's not forget that. And I think the people that are intentionally coming in the way of its success have to be kind of moderated a little bit, because I think it is a great way for the world to figure out about alternate currencies and the impact they have on the future. So, yeah.
I want to add to this alternative currency. So we already have a very nice replacement for fiat currency. In fact, that was the original currency, that was gold. So we had a Bretton Woods system, right? That was eventually abolished in 1971 when President Nixon from USA did not have the adequate gold to support the dollar. So I think we already had gold as it's a virtual currency. You have a 1 gram piece of gold, you go to the market, you can sell it very easily. So it's not that cryptocurrency is solving a problem of medium of exchange. I mean, gold is still a store of value. Gold fluctuations or volatility is not that high. And comparatively, Bitcoin volatility is very, very high. So it's not really a store of value. It was a rebellion. So basically in 2008, the coders started Bitcoin as a competition to a lot of printing of money. So I don't think that people who are looking for an alternative to fiat currency need to go to crypto. They can easily invest in gold, and it is it gives great returns over a period of time with complete safety. I mean, you will not lose your wallet to a fraudster in gold like you do in. Buy gold, keep it in a bank locker. and it's safe. You buy a
But the
Bitcoin,
government can
put it in
repossess your
put
gold
it
though,
into
and gold is still a
into
controlled
after
commodity.
exchange, it goes away. So that's my opinion.
Yeah, no, absolutely. The one thing, Professor, I would say is gold is still a controlled commodity, right? I mean, obviously the folks that invented Bitcoin wanted to have a approach to where nobody can, let's say Kyle's worked hard and made his money. They wanted to give him an opportunity to protect it for the future, right? I mean, with gold, because you have to still go back to the stock market and buy and sell. So it is still regulated. It is still, I agree with you, it's alternate to fiat, but still doesn't have some of those other benefits that Bitcoin does. And it's not that I'm saying Bitcoin is great or anything. I'm just calling it out that it has other attributes. But you're right.
But I would agree. I mean, I have a different opinion. In case of gold, you have two options. You can buy it physically, you can buy it digitally, you can buy a sovereign gold
Correct.
bond if you want a digital. I buy both things. I buy a digital gold bond. I also buy physical gold. So it gives me safety. I mean, it's first of all, I mean, it's a store of value. It was the original currency. The central banks, because of their uncontrollable inflation, uncontrollable printed, moved away from gold. So Bitcoin tried to solve the problem, but it itself has a lot of problems in terms of validity, price control, volatility. So, how much money can you put safely in Bitcoin is a question to be asked.
Okay. I have to kind of chime in there right now and kind of break the conversation and discussion that's going on. Because I need to I think I'm getting signal that I have to start wrapping things up now. Because we have questions from the audience as well. My final question to the three of you is, while seems like there are a lot of different areas of question marks that needs to be answered, whether it is around the technical design, whether it is around the interaction between the central banks and the commercial banks, or whether it is in terms of which types of CBDCs and the whole host of, and how do they address privacy, etc., etc. Based on what you know right now, and if you are doing being a futurist, so Kyle, let me start with you. What do you think the future holds for us as citizens of your respective countries, and what does it mean for governments and businesses with the introduction of CBDC, assuming that it does go through? I mean, if you think that CBDC is a dead horse on arrival, that's a different matter. Then I want to know that as well. And then we'll go around, and then Shankar and Vaibhav.
I think that governments around the world are certainly moving towards CBDCs, and they seem to be inevitable. That being said, it's it's not a huge change. I mean, most things are digital now anyway, and it's really kind of I think more of, for lack of a better term, a back end switch. What I think that implies, though, for reality is that it's going to give governments, which change, a lot more power over their citizenry. And so if you do not comply with a specific preference or, sort of the World Economic Forum social credit score system, your money could be erased or timed out, or perhaps restrict you from buying certain things. This is some things that we need to have honest discussions about in forums like this, because they threaten what it means to live a free life. And so I think it's worth talking about. And if I could just say very quickly, in Bitcoin was invented, it solved, one of its main purposes is that it solved a huge computer science and cryptographic problem. And so the invention was monumental in terms of being able to solve the digital double spend conundrum that existed for many, many, many years. And this creation of what we now call blockchain is really fundamental. And I think that we've talked a lot about volatility, but that's if you have a short time frame. If you looked over the past 13 years since Bitcoin's advent, it is the best performing asset above everything, going up on average about 200% per year. And yes, if you have a very short timeline of 1 to 2 years, you probably, maybe look at gold. But if you're looking long term, it's going to perform better because it's scarce. The first thing that they do when the price of gold comes up, is they mine more gold. They create more paper gold, right? You can't do that with Bitcoin. There's 21 million. There will only ever be 21 million. It's built into the science and the code.
Yep. Thank you. Shankar?
Yeah, I think wholesale CBDCs are here to stay. They clearly improve the efficiency and speed of settlements, help with, it's just like Amazon same-day delivery, I mean, that's what this wholesale CBDC is. It saves you a lot of money. Retail CBDC, again, there's a lot of design aspects to one of the things I like about it is for the people that can't afford Bitcoin and don't trust any other crypto. It gives them an alternative to play and enable DeFi, decentralized finance, in some way. So that part of retail CBDC I like, it's here to stay. But overall, digital assets are here to stay as a way to take the whole economy forward. Lastly, I want to say if all the 114 countries have a working CBDC, then I think and if the US launches it, the US dollar will still be the most effective in a digital form. And the reason for that is not because of anything. It's been the most transparent of all currencies over time, and does not have the same problem as some of the other currencies. So I think it will come back. It still is, and it will be there. Yeah.
Weber?
So I also feel that CBDC is here to stay and it will only go stronger. In countries where the governments are already authoritarian like China, the growth will be much faster. In US, it's a very, very democratic country, so it's not easy to push these things down the throat of people. So that is the only reason the government or the Federal Reserve is slow. It's not that they don't want, it's not that it's because of any reason they can't be fast. That's how US is. So eventually, I think what will happen is slowly and steadily, the CBDC will be a replacement of banknotes. What will happen is slowly and steadily, the government will keep on reducing the withdrawal. I mean, how much cash you can withdraw, how much amount of transaction you can do in cash. So that is slowly and steadily how people will be forced towards CBDC. And maybe one day, one night, the Prime Minister can also come and say that now the notes are not valid, deposit it into the RBI thing, and we will give you CBDC. So that kind of experiment, like in Nigeria, can also happen. There are a lot of risks, just like Kailash touched. The government can program the CBDC. I mean, they can put an expiry date. So if you don't spend, if they want to spur the economy, they will ask you to spend. Then just like companies, ESG companies, everybody talks about environmental, social government. These can also come to individual level. So the government will say to us one day in 2031, Vaibhav Agarwal, because you have driven your car, you cannot buy petrol from this money, you cannot board a flight, you cannot buy a car. So this is about control. The government wants control. Through the crypto technology, the Bitcoin technology, the government has got a very good tool through which they can now slowly and steadily over the next 5-10 years control the public and know what they are doing. No anonymity whatsoever.
All right. It looks like all the panelists agree that CBDC is here to stay, and it'll have its challenges, but the privacy and control of governments is going to definitely be a factor, except in the US and some of the other Western countries where the individual freedom and privacy is considered a lot more important. So there will be some friction there, but it seems like CBDC is here to stay. So people who have rupee notes in your pocket, throw it away and give that to me and invest in e-rupee. Okay. So with that, we are definitely willing to take questions from the audience. So Harpreet or anyone who has got questions. There are a few hands up. Sorry, one second. Try speaking from there. Can you hear?
Am I audible?
Yeah, you are.
Okay. So first of all, thank you so much for this session, and I learned so much and kind of changed my perception about cryptocurrency and CBDC. So now I am really scared of CBDC, and I know that it's coming to get me. But what I understand, the main value for Bitcoins is, and I really appreciate this, that the people who have been excluded in some way from the financial sector have this recourse. But don't you think that this short-term volatility that is there? So I know you're talking about the long-term Bitcoins are still doing super good, but this short-term volatility in many ways sort of flies in the face of this main benefit that you're looking at. So imagine somebody is migrating with their life savings. You get down from the flight and the value of your wealth becomes half. That is not a situation. That's not a situation that you want to be in. So the main benefits that you're sort of you were telling us about from the Bitcoin point of view, don't you think that the volatility is a problem with that? And is there anything you can do about this? Because I think my impression from looking at people who are investing in Bitcoin in India is that they just treat it as a speculative investment, and which has obviously made it much more volatile. So is there any way you can maybe get rid of this? In economics, you would call this an externality. People are just speculating, and that's causing harm to other people who are not getting compensated for that.
Yeah,
Kyle,
so
I
I'll
think-
start and then give it to Kyle. I mean, so I think basically, look, stocks also have volatility, right? Every financial instrument has volatility. I think in the case of stocks, shares, and so on, it has existed over time that we are able to look at the alpha, gamma, beta, and epsilon and kind of give it a value, and therefore, mitigate the risk aspect of it in the form of derivative contracts. But in the case of Bitcoin, it's early days, and I think you should realize that not everybody is fully invested in Bitcoin, right? So the average person has maybe 5 to 10% in Bitcoin, even if you're a hedge fund. So what happens when anything happens to Bitcoin? The world almost floods it, driving volatility even higher. So this situation is only because it's early days, and I think it will definitely get better from managing the volatility aspect of it. Kyle, I don't know what you feel.
I agree. I think it's very hard to, and I think there's a lot of the price fluctuation comes from speculation, and it's very difficult to deal with that, and it's impossible to prohibit it. I will say that I think that is just like Sangar said. It's very early in the process. It is a new technology. It's a new investment class. It's only 13 years old, and so that contributes to it. But I will look at your question from another angle. Now, if you're just talking about somebody who's migrating with their luggage and all sorts of international bank accounts and stuff like that, and is just taking a plane someplace else, and yeah, I mean, the transfer of that wealth is not as big. But if you're looking, let's say you're in Ukraine and you're being invaded, or if you're in a country where the currency has collapsed, or you feel that you are in threat of something and you need to escape over a border, or you need to leave somewhere, you can't take your gold bars, right? Your bank account is confiscated, everything. With Bitcoin, you can literally go over the border and just have your passwords in your head, and then you can access your money anywhere in the world. And so this is what a decentralized ledger system provides, that is controlled by nobody. So that if you are a, let's say, internally displaced person, or if you are forced to migrate for threat reasons, you now have a way to travel and take your wealth with you, even if you can't take your furniture and your gold bars and your bank account. You now can do it with either a small little cold storage wallet that you can hide anywhere on you. It won't be confiscated at a border, or you can do that with just the passwords in your head. And so for people who are in dire situations, this takes a whole new there's a whole new perspective for it and a whole new way of now bringing value with you no matter what, because it's digital property.
Yeah, I will preface this by saying I'm from the environmental school, so I'm kind of like a fish out of water. But I wanted to ask about the process of creating a new, the process and safety of creating a new cryptocurrency. So Professor Ramachandran, you mentioned that there are over 20,000 cryptocurrencies, but there still exist many scams and fraudulent ones such as FTX, as Mr. Kyle said. And correct me if I'm wrong, but the process is not easy, but it is simple. So I wanted to ask if there should be kind of like an overarching, perhaps legal framework to oversee all crypto activities. Is something like that exists already, or is one needed to regulate cryptocurrencies and activities and ensure that a future in cryptocurrency is safer and more reliable?
I don't know whether you folks heard the question, but it was related to regulations and whether there should be controls around the use of cryptocurrencies around the world. So you know that in India there is, RBI with there is, you can't use cryptocurrencies for as a mechanism to buy and sell goods, right? You can only trade in that. So there is some control over that part of it, right? There is cryptocurrency regulations across the globe in different ways, right? China has got a very strict approach towards cryptocurrencies, and so does Argentina. But each country have a very different way of handling the cryptocurrencies and how they should be regulating, how much they should be regulating, right? Well, if you go to Bahamas, it's free for all. If you go to Ecuador, I think it was Ecuador which has made Bitcoin as an official currency that people can buy and sell goods with. So there are, and Cuba is was planning to do that as well. So different countries have different regulatory structures around the use of both trading and exchanges of cryptocurrency. Okay, so that's how it is right now. So there is no one quote unquote unified mechanism to control and regulate cryptocurrencies. Okay. Next, there.
Yeah, good evening, everyone. Thank you for the insightful session. I wanted to ask, as a consumer, right, I've already got a very smoothly operating digital payments infrastructure with the UPI. So until and unless the e-rupee has a significantly different value than the traditional rupee, how is this actually going to benefit me? Like, I'm already scanning QR codes. So if the government puts their own QR codes, how is it any different? And so I want to know what the difference between UPI is and between CBDCs.
I can take that. So I think it will be not useful, it will be bad for you. Right now, if you put your money in your savings account, let's say SBI, RBI, HDFC, whatever, and you have a UPI account, at least that money in the savings account is getting you some interest, 3%, 2.5%, 4%, whatever. When you put the money in the RBI CBDC, there is no interest. So for the customers, I don't really see any kind of benefits at large. It's more for the RBI or the regulators. I don't see any. I mean, I can't visualize any benefit for the public at all, except the people who don't trust the banks. Only those people who don't trust the bank and trust the government more, maybe they can open an account. So that's 5%, 10%. That's all.
So just for the benefit of Kyle, I think there are, people are using in India, there are a whole bunch of payment processing platforms that allows for money to be transferred from point A to point B or person to person, peer to peer. And there is a fairly decent digital infrastructure that allows that payment processing to happen, right? And now most consumers, right, in India, except that 120 million people who don't use it, people are very familiar and use that way to transact business. Whether I go to the grocery store and I practically don't carry my wallet or my credit card, I just take my phone with me, and that's how I conduct my business. So with that as a backdrop, I think the Artham, that's what you're trying to get at. When I have such a strong, payment processing platform, why do I need to get the CBDC in play? I think that's where it is going. So I just want to provide the context. So Shankar?
No, you're right. In fact, other countries are actually trying to launch UPIs of their own, Professor Ram, right? Because I don't think there is a better payment system than the UPI, Paytm, or M-Pesa, and all those three are 1, 2, and 3 in the in the Mount Rushmore of payments. So I think more of the commercial banks and central banks actually, as you know, we consult with a variety of people, and one of the main questions they ask us is how can they get to that level of sophistication, because it's T0 almost. So yeah, I agree with you.
Are are these are they instantly settled like the Bitcoin network would be?
They are because of the fact that all the accounts are linked, and it's very easy to debit and credit at the same time. So yeah, and there may be a tier 1 cities, tier 2 cities, definitely. Tier 3 sometimes may take a few more hours, but it's mostly instant, like M-Pesa and others.
So the only difference could be, one difference could be the fact that e-rupee, they do establish the or sand dollars in Bahamas or e-yuans in China. They are, guaranteed and backed by the central bank, right? While whatever you do transfers, right, they are not necessarily backed by RBI. So e-rupee is equivalent to the cash you carry in your pocket, which is different than your transaction that you do through your UPA, RuPay, GPay, whatever it may be, right? That is one thing, right? So you may want to think about the legal tender of what the currency is. So this is a legal tender. So that's, I think, could be one difference as to one advantage of having e-rupee or a digital rupee or a digital currency as against some other process. But those are just payment processing platforms. This is about cash. It's about cash in your account, right? That's the fundamental difference, if you will. Okay. Other questions? And then if you want more information, Artham, you should attend my elective course on central bank digital currency. Thank you.
Am I audible? Yeah. Hello. So,
And hopefully
hello.
This is the last question to wrap up on time.
Hello. Yeah. So during the conference, we have discussed CBDC, and one of the most, I guess, the concerns that was raised was the privacy concerns. So my question to the panel is there a way we can manage these privacy concerns? And especially, so I understand, yeah, so one example was given of Chinese yuan. So my question would be, if there is an Indian citizen that is trying to invest in there, is there a way that RBI can sort of regulate and bring the privacy concern down a bit? And especially, is there a legal framework that can be initiated by the RBI, or even if it's not from the domestic market, can there be a legal framework internationally that could sort of bring down the privacy concern or maybe regulate it? Thank you.
Anyone want to take that? I'm punting on to you, Kyle, Shankar, or Weber.
Sure. In my opinion, well, certainly, and maybe Sankar will be able to describe the actual technical design of a CBDC better than I can. But, at the end of the day, at the end of the day, people are, when you have a centralized control of a currency, just like in the fiat system, it can be manipulated or used. And I think that risk is always going to be there. And so it's really dependent on the people who control that system. And so in places in the world where you have either authoritarian leaders or in democracies where you have a change of power every 4 years, we have to imagine, okay, well, what will life be like when I have a government that maybe I don't support? When the elected person, for instance, in the US, if I disagree with Donald Trump or I disagree with Joe Biden, do I want them to have control of the mechanism for my own wealth and my stored value and how I can spend my own money? And so that's ultimately going to be up to the people who control it. And I think that it's very difficult to regulate because with an international framework like through the UN, it's really, it's not really binding for most countries. It can be a nice framework and something to shake hands about, but at the end of the day, if a country, whether it's China or Russia or India or the United States, decides they don't want to adhere to that because they have their own domestic concerns, they will then have the levers to push to change how people can use the currency because they have the back end controls.
Yeah, so I think Kyle is absolutely right. I think look at all the problems just from TikTok, right? I mean, there's a whole bunch of people that it's just fun videos. A lot of people believe that's being used to spite this, that, and the other. So in design, what really happens is that you can't have a binary design, meaning all privacy or no privacy. You have to do something in between, but it's very tough and expensive to do because I think what the citizens would like is really just like cookies. They would like the privacy controls to be displayed. So as a citizen, you can choose how much of privacy you want and so on and so forth. But then it also gets to be a cost trade-off, right? Because a lot of, if you can't achieve cash like privacy, and then there's also a lot of KYC and AML regulations that have to be implemented and so on and so forth. So this presents a complication, and also the choice you make also is directly a function of the type of fraud that will hit you. So it makes it very difficult to design it, but it is technically possible, but very expensive.
And I'll just add to that. I think it's really interesting to think about, but remember that most people, no matter where they live, have proven over and over again that they are willing to sacrifice their privacy in favor of convenience. Until they start to find out that all of their data has been sold to a company or is owned by a corporation or has been leaked out to an adversarial country. But in general, that gets forgotten. So the general theme or trend seems to be that your average citizen in their day-to-day life is willing to sacrifice their privacy for convenience, and that's why and the complicated nature of what CBDCs actually are why they are somewhat inevitable at this point. Is just there's a lack of knowledge, and people tend to go with the flow until things are too bad to deal with it.
Lastly, I think by choosing the privacy option, you're actually coming in the way of your merchant serving you, right? So for example, a bank gives you a better interest rate because it sees your good behavior and your credit score and so on and so forth. Now, let us say you choose the privacy option. It would not have access to any of this. So how is it going to put you in the good boy list and kind of reduce your interest on your mortgages and so on? Also, the same is true for a merchant, right? If he does not know who the end customer is and does not see the customer lifetime value, it gets very difficult for those relationships to go to a different place. So there's a lot of questions and answers in this situation.
All right, I think we kind of are running out of time. In fact, we have exceeded our time, but I know that there's not a clear answer. Sometimes CBDC feels like we are a solution trying to chase a problem, and but that may not be so. Clearly, about 114 or 115 countries have actually invested in doing things. The regulatory aspect is still a thorny issue, I think, and it will depend on from country to country. Just like any technology, look at artificial intelligence, you look at IoT. IoT, there is a little bit of governance from the ITU union, telecommunications union, but otherwise, generally, technologies have a very varied implementation and structural approaches to legal aspects of it, regulatory. So with that, I wanted to thank you once again. You want to close that out to, I don't know, 1 second.
I'm honored to have the opportunity to deliver the word of thanks for this insightful and engaging panel discussion on central bank digital currencies. First and foremost, I would like to express my gratitude to the panelists for taking their time out of their busy schedules to share their valuable insight and expertise with us. And Professor Ram, our senior chair of the event, The depth and breadth of their knowledge on the topic was evident throughout the discussion, and their contributions were truly inevitable. The insights shared by the panelists shed light on the practical aspects of CBDCs and how they can use to facilitate financial inclusions, cross-border payments, and efficient payment systems, among other things. It was fascinating to learn about the various models of CBDCs, their potential use case, and how they can interact with existing payment systems. They also provided valuable insights into the challenges and opportunities that lie ahead, and perspective were truly eye-opening. Finally, I would like to express my gratitude to all the participants for their insightful question and active participation. Your engagement were truly appreciated, and it helped to make this discussion all the more lively and engaging. As a word of thanks, we would like to present the panelists with a memento.
So I'm going to move here. So Kyle and Shankar, you are not here, so we can't obviously give it to you in physical form, but typically, so do they have the right one? Do they have the right? So typically what we do is we do give a scarf. This is a JGU scarf with all the colors. We have got 12 schools here. So the scarf contains, and it is personalized and customized with your name. So clearly,
nice.
you, and when we put it to you, maybe in New York, the next time I'm over there, or when you come over here, okay?
Perfect.
So this is your memento.
Sounds good.
for-
Looks really nice. Thank you, guys.
Thank you so much.
Thank you. Thank you so much, folks, and thanks for taking time.
Bye-bye now. Have a wonderful rest of the program.
Thank you all.
Thank you, guys. Folks, before you leave, tomorrow morning, the session starts at 9:30 with 3 parallel sessions. Paper presentations, we have indicated who needs to be here. So please do come. And it is required for all of you to be in the conference room tomorrow. Okay, thank you. I will ask you for the